Hello, welcome to Accounting Hub. I'm Professor George Scarping, PhD in Accounting, and our topic today is recording closing entries and a final trial balance. So, first of all, permanent and temporary accounts. What is the difference? Accounts used to accumulate information from one fiscal period to the next are called permanent accounts or real accounts. What is it? Accounts that doesn't change from one fiscal year to another only because of the changing of the fiscal year. For instance, cash. If my cash is $1,000 at the last day of the fiscal year, for instance, March 31st, it will be the same cash on April 1st when we start the new fiscal year. If we are owner of a vehicle on March 31st, we will keep it on April 1st. The same as liability. If I have an accounts payable on March 31st, we will keep it for April 1st. On the other hand, accounts used to accumulate information until it is transferred to the owner's capital account are called temporary or nominal accounts. Accounts that we account for a period of time, revenues and expenses, and drawing as well. My revenue of my 2021 fiscal year is $10,000. When I started 2022 fiscal year, it goes to zero and we start all over again. So what do? We need to close these temporary accounts, and the journal entries used to prepare temporary accounts for a new fiscal year are called closing entries. And the temporary account balance must be reduced to zero. For instance, when revenue is greater than total expense, resulting in a net income, the income summary, that is the account we use for closing entries, has a credit balance because we will credit revenue, debit expenses, credit greater than debits, revenue greater than total expenses. The credit balance is the net income. On the other hand, the net loss is the opposite, when the total debits, the total expenses, is greater than total credit and or total revenues. We will be working better on that on Excel file soon. And we have the accounting cycle for a service business, the series of accounting activities included in recording financial information for a fiscal period. How does it work? First, analyze transactions. Second, journalize them. And by the way, we have videos about all of these topics in our YouTube channel. Check the playlist that you are in, the bookkeeping playlist. Second, post them on General Ledger. Fourth, worksheet. Fifth, journalize and posting adjusting entries. Later, financial statements, balance sheet, and income statement. Seventh, journalize and post closing entries, our topic today. And the last one, post-closing trial balance, also our topic today. So what is this post-closing trial balance? It's the trial balance prepared after the closing entries. So let's go to our Excel file. Let's go to action. So first of all, this Excel file is free and the link to download it is in our video description. And subscribe to our channel, please, and like our Facebook page, Accounting Hub by Dr. Scarping. So we have here our temporary accounts, starting on sales. So what I did here, I copy and paste sales, advertising expenses, and so on. And by the way, it starts on drawing, but we will be doing that later. And then copy and paste the ending balance. Okay? So here, 7,945 credits. The other ones, debit. So what do we do? So let's work with 3 T accounts, the income statement T account, and 1 T account for revenue, sales, and 1 for expenses. So sales, the ending balance here, 7,945. Advertising expense, ending balance debit, 800. So we need a journal entry to close these accounts here. So date, April 30th. Let's consider that this is the end of our fiscal period. If we want to close these sales here, we cannot just delete it or erase it. We need a journal entry. So we close it with a debit. So our debit will be sales. Our debit, 7,945. So here a debit, 7,945. Because when we close it, sum of credit, credit, less sum of debits, nothing. And what is the credit? The credit is income summary. The credit, 7,945. So here a credit, 7,945. And journal entries for our debits is the opposite. April 30th. To close this advertising expense here, we need a credit. So our credit here, advertising expense. We have no idea about the debit yet. So let's skip it. We need a credit, 800. Advertising expense, credit, 800. How much our total? Sum of debits less sum of, sum of debits less sum of credits. Nothing. And we do the same with all of these ones. So let's copy and paste this till miscellaneous expense. And we also copy and paste this formula. We will get our numbers. However, we have only credits. We need a debit. What is our debit? The same income summary. And how much? The sum of credits. This is a journal entry. We have more than 1 credit. So here, income statement equal 3,853. How much the ending balance? Sum of credits greater than debits. Obvious here. So sum of credits less sum of debits. 4,092. Oops. It is missing 1 expense here. So sorry, guys. So let's sum it. Okay, 4,253. I love Excel formulas. We don't need to do the same work twice. 3,692. If we come here, net income, 3,692. However, income summary is also a temporary account because our trial balance ends on capital. By the way, I copy and paste our balance sheet accounts here. The capital 4,000. So we have no capital here yet, but it's unbalanced. So let's work here with some additional T accounts. So some additional T accounts. Here, 2 additional T accounts, which are Jorge Scarpin Capital, and the other one, Jorge Scarpin, where are you here? Drawing. Because what do we need now? We need to journalize. So Jorge Scarpin Capital, the beginning balance is $4,000 credit. So it is the beginning balance. So let's, in yellow here, our beginning balances. And the drawing, the beginning balance is 1,120. So 1,120. So now we need to close the income summary and drawing. So how do we do that? April 30th, we need to close income summary. So it has a credit balance. So we need to debit it. How much? 3,692. What is our debit? Our debit will be Jorge Scarpin Capital. So we close our accounts to Jorge Scarpin Capital, to our capital account, for a sole proprietorship. So it is not for a public company. So here, let's move to the T accounts. Move to the T accounts. Now this one is closed. So equal sum of credits less sum of debits. Now it's closed. We are good. However, drawing is not closed. So April 30th again. Now we need a credit to close it. So Jorge Scarpin drawing. We need a credit, 1,120. What is our debit? Jorge Scarpin Capital. It is the same 1,120. So the drawing, here, the capital, here, drawing, sum of debits, less sum of credits. Nothing. Capital. We have an actual ending balance. So sum of credits less sum of debits. 5,572. Let's work on green here, because this number we copy and paste to our trial balance, and then we check if it is balanced or not. So equal 6,572, and we are good. So what is this? All of these accounts here, they are the temporary accounts. So we will be able to open it on May 1st, when our next fiscal year starts. All temporary accounts are closed. We have only permanent accounts here. Amazing, huh? I love that. I love accounting. So guys, thank you so much. If you need, you can watch this video how many times you want, how many times you need. Share with your colleagues. It will be very useful. Questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.